Welcome back to Fintech Spy, where we turn every red candle into a personality test, and the chart always chooses avoidant attachment. Today, we're talking SoFi, and yes, Friday finally showed up in a green hoodie like, guys, I'm totally fine. And before we begin, this is parody, entertainment, and absolutely not financial advice. If you're looking for certainty, please consult a magic 8 ball or your group chat's loudest guy. Here's the setup. We just had a sector-wide green day on Friday, and the mood is complicated. Is it a bull trap? Is it the start of recovery? Or is it the market doing that thing where it's nice for one day and then pretends it never met you on Monday? SoFi is sitting around 2120, and the story this week is basically technical damage plus a suspiciously hopeful news tape. The chart looks like it tripped down the stairs, but the headlines are showing up like a motivational speaker with a microphone and a dream. So today, we're walking through analyst positioning, the news nuggets. Yes, I'm going to be unreasonably excited about them. Then we hit weekly and daily chart facts and finish with options, because nothing says healthy retail behavior like staring at open interest and pretending it's a prophecy. Analyst updates. The big headline is actually the lack of drama. No brand new ratings after earnings. And honestly, that's kind of bullish in a weird way. Nobody came out like, we've seen the light, downgrade to candle factory. It's more like the street is sitting there, arms crossed, going, we'll allow it, for now. The other key piece, average target is 25.28, while we're around 21.20. That's roughly $4 of upside implied by consensus, which in SoFi terms is basically a full emotional life cycle. Denial, hope, euphoria, and then an unexpected dip because someone sneezed near a bond yield. So, no new ratings, targets still above price, and the street isn't changing posture overnight. Translation, analysts are still treating this like a company that can execute, while the chart is currently acting like it needs a glass of water and a quiet room. Now, news nuggets. This is the I love this segment, respectfully. This is where I put on my everything is bullish because I can read glasses. Because the news tape this week, it's spicy. It's like SoFi's PR and insider forums looked at the chart and said, we're not leaving you in this vibe alone. First, Thursday we got a Form 4 where the EVP of global borrowing bought 5,000 shares on the open market at around 1993. That is not a my mom told me to diversify purchase. That's an I know where the bodies are buried and I still bought purchase. I'm not saying it guarantees anything. Again, not financial advice. But I am saying it's the kind of thing retail sees and immediately starts whispering, wait, do they know something? Then Friday, we got another Form 4. The General Counsel bought 5,000 shares at around 2104. And I love this for the plot. Because when the lawyer buys, that's the corporate version of, I have reviewed the chaos and I'm still comfortable. The General Counsel is basically the person whose job is to imagine worst-case scenarios for breakfast. And they looked at the open market and said, sure, I'll take 5,000. Now Friday morning, we get a post from SoFi Investor Relations about their first IR spotlight, where they talk about what they've started doing and will continue doing with the capital raise money. And the part that made my little retail trader heart do a backflip. They outline what this path means for ROE this year, and longer-term aiming at 20% and 30% ROE targets. That's not a meme. That's grown-up language. That's the kind of sentence that makes a spreadsheet person sit up straight like a meerkat. Yes, DDI, I am looking at you. And then, because the universe needed a finale, Friday evening, we got an unusual tweet pointing to an Anthony Noto interview with Tevis and Tanner. And yes, it starts with the usual Noto locked-in CEO answers, hitting familiar topics like guidance philosophy, interest rate planning, expanding the loan platform, and how the crypto side is doing. All the classics. The hits album. The yes, yes, we've heard this track before tour. But then we get the good stuff. We start hearing about future changes coming this year and beyond. And this is where I'm basically standing on the desk yelling like a sports commentator. We heard about SoFi Coach and AI being internally tested and progressing. We heard they'll iterate on SoFi Plus and Smart Card. We heard them talk about how they keep growing when personal loan growth plateaus. And we even heard about future timing for international expansion. That's not we're surviving. That's we're building. That's roadmap energy. And then, at the end, Noto drops what we'll call the spicy one. They're looking at research analyst reports from other companies, checking whether the research is ethical and correct, compiling data, and potentially publishing their own. maybe even challenging others' research to improve the quality of data out there. Along with that, he promised to be more transparent with company data and share it more often. Is that spicy? Yes. Is that a CEO basically saying, some of y'all are writing fan fiction with decimals? Also, yes. And regardless of how you feel about the idea, it's a signal that SoFi wants to control its narrative and push back with receipts. So yeah, news verdict. This is a very loud week of signals. Two insider buys. IR Spotlight talking road targets. A roadmap-ish interview with product iteration, AI testing, and more transparency. If you're a long-term bull, you're reading this like it's a trailer for season 3. If you're a bear, you're reading it like, okay, but the chart still looks like it fell into a pothole. Both can be true. Welcome to the market. Weekly chart facts. Zooming out, the vibe is, it's not as big a step down as it looked midweek, and that matters, because the weekly is where trends either heal or quietly break your heart over the course of 6 candles. Key level. We bounced off the 20.68 fib. That's the weekly, don't make me tap the sign level. It's the kind of price point where buyers show up not because they're euphoric, but because they're stubborn and emotionally attached to a line they drew months ago. And there's an important shift. Midweek, the candle was thicker than it ended up being, meaning Friday buying came in and changed the shape of the week. That doesn't guarantee a reversal, but it does tell you demand showed up when it mattered, at least enough to keep this from looking like a total weekly freefall. Momentum-wise, the weekly MACD is still drifting down toward neutral, so momentum is cooling, not accelerating. And stock RSI is way oversold, which is the chart's way of saying, I have been bullied enough for 1 week. Then we've got the moving average storyline. The weekly 50 EMA is around 2214, and we're below it, but trying to recover. Being under that line is a classic prove-it zone. Bulls have to reclaim it to stop the weekly from feeling like a longer reset. Bears want price to stay below it to keep the pressure on. Weekly summary. Support held at 20.68. Momentum still healing, and the chart is oversold enough to tempt bargain hunters. The roller coaster may have found a bottom, but now we find out whether it's a little hill or the start of a long climb where everyone complains the whole way up. Daily chart facts. Now we go daily, where feelings become actionable mistakes. The big note, we broke just below the 200 EMA, but maybe retracing back toward it. That's meaningful because it's one of those institutional eyesight levels, like even people who don't believe in technical analysis mysteriously care about the 200 EMA as soon as price touches it. And the moving averages paint the picture. The 50, 100, and 200 EMAs are above current price, and the daily action through the week was downside pressure with Friday attempting to stabilize. Plus, we had the 50 and 100 EMA crossed by 2 cents. That's the most passive-aggressive crossover imaginable. That's not a cross. That's a shoulder tap. The chart going, excuse me, just squeezing by. Momentum-wise, the daily MACD looks like it's resplitting through the week, so we're not in a momentum is roaring back phase. It's more like momentum is still leaning bearish, and price needs to prove it can reclaim key zones before the daily stops feeling heavy. Stock RSI was oversold most of the week, with Friday finally ticking up. That's often what you see when a sell-off starts to exhaust. Oversold stays pinned until suddenly it doesn't, and that first unstick can be the start of a bounce attempt. Not a guarantee, just a first sign selling pressure might be easing. And RSI is now rising back toward neutral, which fits the idea that Friday buying may have been real enough to change the short-term tone. Daily summary. We dipped under the 200 EMA, tried to stabilize, and Friday hints at a bounce attempt, but the broader daily momentum still needs repair. This is the are we bottoming or are we just pausing zone? Options oddities. Because this is where retail goes to feel in control. We're looking at the February 13 expiration, and the expected move is plus or minus 1.83 from around 2120. So the options market is pricing in a meaningful weekly window. Basically a wake up and choose violence range. Open interest story is clean. On the put side, the biggest open interest is at 24 with 9.1K contracts, followed by 25 with 8.6K. Yes, those are above spot, which is always a fun psychological twist. It can reflect hedging structures or positioning that isn't simply price must go down, but the takeaway is there's heavy positioning clustered in that mid-20 zone, and it matters. On the call side, the biggest open interest is at 26 with 7.5K, followed by 25 with 6.3K. Same neighborhood, same focal point. So what does the chain say in human terms? It says everyone is staring at the mid-20s like it's the main stage. That's where the crowd is gathered. That's where the narrative lives. Bulls are chanting, "Reclaim the 20s." Bears or hedgers are replying, "Sure, but make it messy." And with that expected move, you can get a lot of drama while still staying inside what the options market considers normal chaos. Translation: don't confuse volatility for truth. Sometimes it's just the market doing cardio. All right, audience question. After that Noto interview and the insider buys, do you think retail sentiment is actually turning? Or is this just the classic one green day and we all start naming our future yacht syndrome? And bonus question, does the idea of SoFi potentially challenging analyst research make you more bullish? Or does it make you go, okay, Tony, put the gloves down. Drop your take in the comments. I want the optimistic arguments, the skeptical arguments, and at least one meme-level coping strategy. If you enjoy market therapy disguised as technical analysis, tap like, subscribe, and share this with a friend who thinks a fib level is a government agency. It really helps the channel, and it helps me afford more chart lines to emotionally attach to. Bottom line, SoFi's chart took damage, but Friday showed signs of life. 20.68 held, and the news tape is suddenly acting like the future might actually be a thing we're allowed to talk about out loud. And as always, this is parody and not financial advice. If you trade based on this video, you're not investing. You're participating in performance art.